Hello and welcome to the one trading secret that could make you rich, inside days. What inside days are, how to identify them, the setup, how they work, entrance criteria, management, exit criteria for maximum profits, and much more. I want to thank you for purchasing this video and joining me today. My name is David Vallieres. I'm the founder of TradingOlogy.com. And I'm going to take you through the setup for this video and the trading strategy that I think is probably one of the most dynamic trading strategies around. There's lots of different kinds of setups that you could get into in the market, but this one is a particularly active form of trading, and it has, some of the benefits of this particular setup is that it's low risk. It has specific entry and exit criterias. They're easy. The setup is easy to identify, and I think it's going to be a lot of fun. So stick with me here as we go through it. Some of the material may be absolutely brand new to you. Some of it may be, just a review for some of you. But please stick with me because I think you're going to find this incredibly rewarding. I really do and sincerely mean that this could be the one strategy that could make you rich. If you're interested in actively trading, there's lots of opportunities to do these types of trades in just about every single market for securities out there. And I think you're going to find that once you learn how to identify them, you're going to be seeing quite a few of these opportunities available to you that you can trade on a regular basis. And there's absolutely no limit to the number that you can trade, of course. But let's get into exactly what inside days are if you're not familiar with what an inside day is. An inside day is a day that has a lower high and a higher low than the previous day. For example, we're taking a look right now at a chart of American Express, and I've come back to a particular trade that we're going to be setting up here as our example trade, which we count as day one. The day, in other words, the day in which we identify the inside day is considered day one. And this happens to be on February 11th of 2008. As you can see, let me just draw a little circle around these days so that you can get a better sense of what I'm talking about. The first bar here is this is a daily chart again. The first bar is a fairly wide-ranging bar. In other words, the low and the high encompass a couple points on American Express. And the day that follows that is a relatively short bar. In other words, the high and the low falls within the range of the previous bar. In fact, it's probably less than 50% of the previous bar's range. Though that's ideal for the setup that we're looking for. This is called an inside day. Most of the time, inside days are also narrow range bars, which this is. It's a fairly narrow bar inside of a larger bar. And we call those narrow inside bars, or nibs. It's really amazing once you learn how to identify an inside bar. You begin to see these quite frequently in your charts. It doesn't matter what stock you're looking at. This happens to be American Express. And of course, this is not a recommendation of American Express to buy or sell their securities, but I'm using this only as an example. There are many stocks out there. In fact, there's probably hundreds or even thousands of stocks that display this type of inside bar on a regular basis on their daily charts. So once we have the inside bar, we understand what the definition of an inside bar is. You can begin looking through your charts to see where you can find an inside bar. Now, the objective of the strategy really is to accumulate short-term profits on a consistent basis using, as I mentioned, objective entry and exit criteria. It really can be used on any liquid stock on a daily time frame. We're not looking at weekly charts, we're not looking at monthly charts, we're not looking at intraday charts. We're looking at daily charts only for this particular strategy. The strategy itself, over the time period that we've measured it, has an 84% chance of hitting our profit target number 1, a 16% chance of hitting our profit target number 2, and a 9% chance of hitting our profit target number 3. And I will go through the criteria and the calculations for each one of our profit targets. There's a high probability of profit in this trade, but there's also a risk of loss if the trade doesn't work as planned, and the maximum risk is really greater than or equal to the range of the inside day. Risk is managed using stop loss limit orders, and there are additional risks, of course, to holding stock besides stop limit orders, which you should be aware of. And if you're not an experienced trader, then you should understand what those risks are. One of those risks I'll just mention briefly is the fact that even if you do put a trade on for a stock, it could gap much higher or much lower than your entry, creating losses greater than we've mentioned here. Okay, let's identify inside days or nibs. Basically, in any stock, you have bars. Now, we use exclusively in Tradingology the candlestick charts, the Japanese candlestick charts. We think it's easier to identify inside days using Japanese candlestick charts. The only real definition of an inside day is that you have a lower high, which this does. This particular bar has a high that is at 45.74, and the bar that follows it has a high of 44.57. So it definitely has a lower high. But in order to meet our definition, it also has to have a higher low. Well, the low of this particular bar is 43.54. The low of this bar is 43.71. So it does have a higher low as well. Let's zoom in just a little bit here, and we can get a better sense of exactly. That's what an inside day looks like. Now, in addition to being a lower high and a higher low, we'd also like to see this inside day about 50% or about half the size of the bar that precedes it. In this case, you can see it's probably a little bit less than half of the size of the previous bar. That provides us with a low risk opportunity to enter a position in which this trade hopes to capitalize on. If the inside day is a little bit larger than this, even if it's 50%, 60%, maybe even 70%, sometimes that has the potential to work. But we'd like to see this particular inside day as small as possible. It does not necessarily have to have a small real body like this particular candlestick has, or what's called a spinning top. And if you're not familiar with candlestick terminology, it's not required to utilize this strategy. But what I want to take a look at is the particular inside day in relation to the bar prior to it. You want it to have a relatively small body, a relatively small and narrow range compared to the day before it.